You're listening to Toronto's #1 real estate podcast, powered by Watson Estates. The most successful local real estate investing starts right here, right now. Here's your host, broker, investor, and social media influencer, Bradley Watson.
Good morning, investors. Bradley here from Watson Estates. Thank you for tuning in. Today is Wednesday, June 24th, 2020, and here we are with so much more news. We cannot sit on our hands these days. The news is crazy, guys. And I'm so excited to share some of the highlights that I've seen over the last 24 hours with you, including but not limited to the CMHC's new stance on home prices in Toronto. Apparently, they've changed their tune. So we're going to talk about that and what repercussions that will have on people's investments here in our city. And then, were immigrants and foreign investors what was single-handedly driving the property market? A very interesting article came out of Toronto Stories. We're going to dive into what they have to say and ask so many questions as we continue to frame our thinking on what comes next. We know that the taps of immigration have been shut off, so what happens next? And then, how are tenants protecting themselves against landlords? They are going to big measures right now to protect themselves. Maybe it's the fear of a looming eviction. Whatever the reason, I want you guys to be prepared as landlords and also knowledgeable as tenants on what comes next in your world and in that discussion that's happening on an ongoing basis. We are #1 for Toronto real estate on iTunes, on Spotify, and Google Podcasts. Thank you for tuning in every single morning. I'm so happy you could join us. And let me ask you guys the first question. This is a joke, by the way. We got to lighten the mood a little bit in here before we get into what CMHC is going to say. Where's the best place to tell a joke at a party? The punchline. I actually made that one up. I didn't find it online. Can you tell? Everyone has been looking at CMHC as a joke, and they just dropped the biggest punchline. They're getting laughed at hard right now. So what happened was they began with broad stroke predictions. All the way up to the CEO of Rain is kind of shaking his hand like, what are you doing? And now they're looking at more specific regions, and in their attempt at doing that, they've actually pulled back huge on their initial predictions. I'll tell you one thing, Better Dwelling has not released an article on this. I think there's a reason they're sitting quiet, but I also don't think this has been huge news either yet. I don't think it fits this narrative of things coming down because everyone has been going and jumping on this 18% story time and time again because it's just so wow, right? It's just like, what? Almost 20% drops. And not only that, they said that the big cities would be hurt the most. So you would assume Toronto would be on the top end of that. And so now to change tunes a little bit and say, well, you know what? We might actually have to readjust this. Well, that's not very sexy. And so I think people are kind of being quiet about this, but we're not quiet. We as investors want to know the news. We want to know what is the current position. We get it. Like, I know I get it. The forecasters are going to change their tune because let's face it, they were predicting everything from up 20, down 20, maybe not up 20, but up 10, down 20, and everything in between. And you can pick whatever party you want, but why can't we just listen to what everybody has to say? Why do we have to pick sides? Why do we have to have division? Let's look at the factors. Let's look at what's happening. And then you guys can make your investments accordingly. So we're going to jump into what is definitely the most important thing, the news today. Forget what's popping up top on your feed. The most important news is what CMHC is happening. And then I think this is going to have big consequences, big impacts in the coming days. So pay attention to this article. CMHC predicts home prices decline in major cities, but retreats from its earlier forecast of 18% plunge. That's the title. Prices could decline by as much as 12% over the next 18 months before recovering in 2022. So don't think that CMHC is all of a sudden saying, oh, prices are going to skyrocket. No, that's not what's happening here. However, they've taken that extreme position of like almost 20% declines potentially and said, you know what, that's probably not going to happen. And then they've given more clarity on what they think each major city or urban center is going to do. Home prices in some of Canada's major urban centers could decline by as much as 12%, that's the high end, over the next 18 months before recovering in 2022. Because before, if you guys remember, they were talking about it would be 2022 would be kind of, it would take that long for us to get back to prices. So they've kept that tune, but as far as the numbers goes, they pulled them back quite substantially. And this comes from a report that we just had released from the housing agency. So here we go. The report comes just weeks after CMHC CEO Evan Siddell, you guys remember this tweet, predicted an up to 18% decline. Do you remember we talked about that? Feels like forever ago, but it really was not that long ago. It was weeks ago. Like, I think it was like 2 weeks ago, over the next 12 months, which many criticized as being, did I criticize it? Probably, as panic inducing. I don't know if I ever called it panic inducing, but it's extreme. And it was very strange because CMHC, like, that's the government. That's like, now my thinking all the way through was, well, maybe they're overshooting their statement because they want to come out the other side and say, well, we thought it was going to be 18%, but it only ended up being 4%. And look at how great we are. We saved the market. I don't know. Maybe that's what's happening. But on Tuesday, that would be yesterday if you're counting, CMHC's Deputy Chief Economist, Alan Urweth, cautioned that any predictions the agency makes over the next few months will be subject to a high degree of volatility because of coronavirus-related uncertainty. Oh, I see. It was the volatility, the last 2 week volatility. Okay, got it. Of course there's volatility, but you just made the statement within like a month ago. Anyways, I find it hilarious. I really do. I really do. Everyone's trying their best. There's a reason some banks have just said, you know what, we're not going to say anything. We're not going to track things. I mean, there's so many major associations saying we're not going to forecast. We're going to track and then make our decisions accordingly. Like, a lot of people are sitting on the sidelines, which is probably the smart move, obviously, because then at least they're not the laughingstock of the city. This is a quote, we do not know, for example, if there will be a second wave later this year. This is true. This is a big red flag we got to keep our eye on. It is also too early to say what impact the virus will have on the rental market, for example. I think it's obvious. The rental market got clobbered, and it is getting clobbered. I'm just hoping we're seeing some stability in some of the numbers, but time will tell in the next couple of weeks. We know that the decline in immigration and interprovincial mobility will lower demand for rentals, of course. We're going to talk about immigration in just 1 second. In fact, that's one of our major topics today because I think we need to spend more time camping out there now that we're allowed to camp here in Toronto. Do people camp in Toronto? I don't even know if there's a spot to camp. At least not, I mean, assuming you can't afford a house, then I guess you can camp wherever you want, like in San Francisco. In Toronto, the CMHC predicts average home prices could decline by between 3%, this is Toronto, guys, to 10%. So it's not even the 12%, it's 3 to 10%, with the softening disproportionately affecting condominiums as opposed to houses and townhomes due to supply discrepancies between the segments. So, in other words, we're not going to see 12%. We're going to see between 3 to 10%. I tend to think it'll be closer to the low side, but that's a shock. Like, that's incredible. If Toronto, in fact, did see a 3% decrease, that lines up almost exactly with what real estate brokerages are saying. Like, yes, we've changed our tune. We've slid what seems like kind of slightly. We've just pivoted a little bit. But that pivot brought you in line with the most optimistic predictions. Does it make sense? Like, nobody's really calling for price growths in 2020, except for every so often I hint at it because I think, well, would that be funny? But nobody's really saying that. Everyone's saying that we're just going to see a rebound in 2021. Did they say that too? Like, they're seeing in 2021, they're seeing 3 to 10% by 2021. So between now and next year. But not a whole lot different than the tune of some people. I guess some people are just claiming the recovery would happen by 2021. Instead, they're saying that won't happen until 2022. But we're talking a 1 or 2 year blip when we've seen over the last, look at the trajectory of prices in the GTA. So if we're going to be dampened in our prices for a year by 3%, like, real estate is not a short-term asset. This is a long-term maneuver. So as long as you're not buying something today and selling between now and 2021, does it really matter? But I find it ironic. We've got sources like Better Dwelling being very quiet because how do you position this? Now, here's some things they've said. Strong pre-construction sales. These are some of the reasons I think why they've rejigged their forecasts. Pre-construction sales across Toronto Central Metropolis area owing to a more robust and diverse economy will ensure the Toronto recovery will be slightly stronger than the rest of Ontario in 2021 and 2022. If you weren't tracking what we've been tracking, you wouldn't understand it. Like, why? Like, how does pre-construction sales help that? Well, just yesterday we saw pre-construction is down. They had like over 500 across the GTA down, and they're delayed between 3 to 6 months. So the way I understand this is pre-construction is coming on very slowly, and therefore reduced supply means more competition. More competition allows them to speculate on prices and charge more, but also it means, so we're seeing these prices coming up on pre-constructions because the supply is getting tight. So we've got tight in pre-construction, we've got tight supply in the resale market. We are tight. It's pretty tight here in Toronto. Home sales in Toronto are forecast to decrease for the rest of the year before recovering in 2021. You get the idea. You get the idea. We've got short-term job losses in the city came largely from low-wage workforce. We've seen that. We've been tracking that. And that seems to be what's affecting the rental market. Excuse me. Affecting the rental market, but not affecting the housing market. Explain that. Well, there you go. Right? So there's a disproportionate connection. Now, I have received comments on YouTube, and I'm not discrediting them. I just don't see it happening, that this could translate, the unemployment could happen from the low income, but then translate into the mid to high income. I get that argument that it would spill over, but I don't see how that would happen. Like, how does that transition happen? Because these people are still working. They're working from home. Maybe it's because consumer purchasing. I don't know. I'd love more information on that. If you guys have any insight on how that could translate into affecting the other segments. But for right now, we don't see that. All we're seeing is rentals being impacted. Broadly, listen to this, guys. This is across the country. This is what's so funny. Originally, they talked about only Canada. Canada, this is what's going to happen. And they just said, as I mentioned, the big markets are going to be more affected. That's what they said. But now they're saying this. CMHC expects the housing market in Quebec, Ottawa, and BC to follow a similar trajectory in terms of recovery, given the similarity in the labor market trends in those provinces. Alberta, Saskatchewan, and Newfoundland and Labrador will likely take longer to recover, given the impact of the prolonged oil and gas recession. So they've changed their tune on that as well. The big cities are now going to see a quicker recovery. So for the conversation where it's like, oh, well, maybe I'm going to invest in these outskirt communities, guys, you're seeing this playing out on a nationwide basis, but it also plays out locally. We discussed this. The closer you are to a downtown or a major metropolitan area, the bigger the fluctuations. You get the big highs, but you get the big lows. But they're also the areas that bounce back first. And I think this is what you're seeing. In a matter of weeks, we are now seeing these drops translating into opportunities coming back in areas that are more desirable, namely Quebec, Ontario, BC. So this is the transition that's happening. But what I find also interesting is Ottawa. Because I was just talking to Patrick Francie. In fact, he is the CEO of the Real Estate Investment Network. That's going to be on YouTube today. Do not miss that, guys. There were some tech issues on it, and we worked it. We made it good, and we're going to launch that on podcast tomorrow. Don't miss that, guys. That is such an interesting perspective. I love it, and it lines up so well with what we're talking about from a different angle. But one of the places that REIN is pitching to their membership is Ottawa. Ottawa is the place to be, because they have great employment. They have the federal government has cleaned up shop, and they are employing people like crazy. They haven't been affected in the employment segment. Yet CMHC is predicting a 10% decrease in prices in 2020 and 2021. So they're actually worse off than Toronto. So pick your investments, figure out where you're going to go. Very interesting stuff. Here's my view on the market, just to kind of summarize what I'm seeing, where we stand. Real estate is red hot right now. We know that from the stats, and you're hearing that. Number of showings, number of activities. We are seeing on the ground 5 to 10 offers all over the place. East End, West End, downtown. I'm hearing about it across the GTA from other agents and partners. However, though the next 2 to 3 months will be clear skies, pending no second wave, obviously. This is the big unknown. And we're going to have to track that. The last quarter of 2020 is where I see you're going to get the most significant risks. This is what we should be watching. Now, if we're entering as a long-term investment, that's the best approach right now. If you're going to jump into a market, there is potentially, there's always the best time to plant a tree is 10 years ago. The next best time to plant a tree is today. right? But we also need to recognize that we could be in for a little bit of volatility between now and, in the worst case, now we're seeing 2021. There you have it. So let's get away from prices. Let's get away from forecasting, and let's talk about what we have seen. Let's talk about numbers. Let's talk about, and then let's also ask the question, because we know that our doors amid COVID have been shut off at the border, right? I mean, we're still allowing new residents, so I guess shut off is not a true term, but people are not traveling to the same extent. And immigration is such a huge factor here in the GTA. So I wanted to dive into this article. I think it's a great article. Again, one that's been underappreciated. This is very important for you as investors to read, maybe not for everyone else. Nobody else really cares about this, but if you want to get invested in the Greater Toronto Area, you need to be tracking this, and you need to be understanding what the impacts are as far as immigration, because there's such a significant buying power here in Toronto. So here's the article. Vacancy rates in Canada's two biggest housing markets are rising. Rents are falling and luxury homes are struggling to be sold. So what they did here is they discussed with several realtors. In fact, I think they got 3 realtors who work specifically with people who are mostly Chinese nationals, but people across the world. Okay. So this first person, Christine Zhu, Toronto-based realtor, she helps her clientele almost exclusively Chinese nationals, and they help their international students in Canadian universities and high schools. That's what she does. In a regular spring season, she would have at least 8 sales every month, but they're saying she has not facilitated a single purchase or sale on home since the start of COVID. So this person who's working with international buyers is dead quiet. There are approximately 640,000 international students in Canada. Over 50% of them are Chinese and Indian nationals. And what we've seen in past, it's not in here, but we've seen this before, is Ontario accounts for most of them. Like we are a big chunk of that. We are the most impacted. In a typical summer season, tens of thousands of new foreign students, landed immigrants, and non-permanent residents looking to work arrive in Canada seeking some kind of housing, either to rent or buy. Now, we know generally most of them will rent for 3 years before they stay long-term. And so that's why I think you're seeing a noticeable impact in the rental side. In particular, vacancy rates are rising in downtown rental markets, pushing prices lower, while luxury homes that usually attract rich foreign investors are struggling to be sold, leading to price drops, or in some cases, court-ordered sales. They're actually talking to an agent out west who noticed that there's wealthy foreigners or permanent residents who live abroad are having trouble there. So she said she's had trouble selling downtown units that some investors will buy in bulk. And there's another person I want to include here as well. The third realtor is a Vancouver-based boutique real estate firm. They found that mansions worth $5 million or more are struggling to be sold because rich foreign investors are not available to go house shopping at the moment. So if we were to sit back and look at our market, who has been most heavily impacted? Well, they're not selling high-end homes, but because people aren't buying high-end homes. So that market has almost shut off. At the same time, condos have been significantly impacted. We've seen this in the numbers, we've seen this in the trend. So does it come as any surprise that these are the areas of most interest to immigration, most interest to people buying, whether it's from a foreign investment or from people moving into our country? We have seen permanent residents drop by 80% from the year prior. Although we were kind of number one across Canada and the States, we have seen record number dropping here. And so we had just 4,100 people processed, whereas last year we had 26,900. That's a pretty significant drop. And so we're seeing that playing out in rentals, like we're saying. And one of the things that I find fascinating here is since 2017, it's not in this article, but we have seen a steady decline in foreign investment in real estate. It's been dropping off every single year. And this, I don't even know where I found this, but I've seen this in past studies, past research. And so this isn't a new thing, right? I think the new people coming to Canada, that is being impacted, but the foreign investment is already on its way down, especially from mainland China. So I think what's happening here is mostly psychological, but we also see some of the stuff shining through from, for example, they're saying that in Canada, we have, where is this number now? So I've read it through and now I've lost it. Where is it? I can't find it here, but somewhere in this article it talks about how we locally have seen twice the per capita deaths because of COVID. So although we kind of say, oh yeah, we are amazing, people are going to want to come here on the tail end of COVID, we have to tread carefully because we have to make sure that we are still a desirable place when everything is said and done, because it seems, I mean, obviously China has a larger population, but it seems that we're not, as much as we kind of gloat, oh yeah, we're doing great, we're doing awesome, we're amazing, who wouldn't want to live here? The numbers show that, I mean, who's to trust Chinese numbers, but our numbers would appear to be worse. And so that could affect that as well. Very interesting stuff. There's scant Canadian data available on foreign buyers' recent purchasing habits, but information from the Chinese website shows that Chinese nationals made 26.5 fewer inquiries on Canadian property. And in Toronto, they made 34% fewer inquiries on real estate the first quarter of 2019. So that's a pretty big drop, right? People aren't shopping. Foreign buyers are not shopping. And there's the death number that I was looking for a minute ago. Roughly double the number of COVID-related deaths occurred. And we need to be careful to manage the pandemic. That was my note. And then we've got this debate, right? So between the two expensive cities, Toronto and Vancouver, will this affect, and there's no certainty on this, by the way, this is for you to make the call. Will this affect positively or negatively our market right now? Now, obviously, if things will continue in the path that they are and nobody is coming here right now, and let's say 6 months to a year from now, people begin to come back, I mean, that's a good thing, right? That can only be a good thing if that in fact matters. But before we jump off of this topic, I thought, okay, well, let's talk locally, right? Because we're really relying on local buyers right now. And I saw this article and I just could not skip over it. It's this question: can your employer really cut your pay for working from home? And this article, and I can't find where it is now because I've moved it, but they interview this guy, a Toronto employment lawyer, Andrew Monkhouse. I love that name, Monkhouse. He's the type of lawyer, he just sits at his temple and meditates. You walk in and say, Mr. Monkhouse, I need your help. Oh, one cannot fully appreciate working until one has a job. Oh my goodness. All right. So what he's saying, apparently, so this question is, okay, now we're working from home. Can they just turn around and say, employer, now I'm going to pay you less? And obviously would affect disposable income and all of that stuff. But apparently, location-based pay is nothing new. In some public sector roles, like provincially appointed judges, pay is influenced by geographical considerations. But employers cannot unilaterally downgrade an employee's pay unless regional pay scales are part of the original employment contract, which is rare in Canada. So it won't have any immediate pay cuts. But I would think long-term, as people shift to working from home, we're going to find that this could affect change, right? This could affect us. So time will tell. We will see. Okay, let's move on to our next topic here. And actually, before I go there as well, just side plug. Banking Watchdog warns of added pressure on borrowers. Right now, OSFI, they had the opportunity to request the banks to guard against more risks and put more money aside. This just happened. Something called the Domestic Stability Buffer. They set aside a portion of their capital during good times so they can draw down during economic stress. Anyways, they had a chance to have banks do that, but they're saying both the quantity and the quality of capital at Canada's biggest banks remain strong. And the decision reflects OSFI's assessment that the current DSB level remains effective in supporting the resiliency of the Canadian banking system. In other words, the banks are fine. Banks are fine. Don't worry about our financial segment. The OSFI is on it. If they want to drop it, they can do an emergency drop at any time, and we've seen that back in March. Okay, so really the question is are people going to go back to work despite CERB? Time will tell. Let's move on. There is this galactic battle happening between tenants and landlords alike. The Death Star. Who's the bad guys? Who wants to be the bad guys? I am your landlord. Landlords are always the bad guys. If the tenants were the bad guys, I'd get a ton of flack. There is a massive double standard. Let's be honest. When I was in high school, I had a teacher, a grade 8 math teacher. Shout out Miss P. Terrible teacher. She would give all her students a thing called black dots beside their name if they were bad. It was a terrible way to build into your children. Come on. I guess this is a while ago now. I don't know if they're still allowed to do this. But her favorite students would never get these black dots. And here I was a good kid. I was a good student. And I forgot my sweater, okay, in the classroom. And here I get a black dot. You know, like, come on, man. Anyways, that to say, some people's reviews can be outrageous. And just yesterday, there was actually an article. Let me look at this. No, actually, I wanted to mention this first too. This is not limited to teachers and not limited to a classroom. Yesterday, I find myself having to block people for swearing, cursing on YouTube and on our channel. Like, what are you doing? What are you doing? Some people, man, their reviews, they're outrageous and they're silly and they don't build or encourage or support or even get your point across. They're just throwing black dots. Well, there is a platform now for tenants to throw black dots at landlords, okay? Not that long ago, I found an article, it was actually in the States, where landlords were able to comment on tenants. And it's actually a private company that you buy into, and you can get information on what the tenants are doing. So if there's any issues with tenants, you can connect to this community. And there was a ton of backlash. How can you do that? How can you keep track of the tenants? And there's privacy issues. You know, you're making money off of information and off data and da-da-da-da, whatever. It's just anger, right? Like, I don't even think it's not well placed. It's definitely not. Because now we have a site here in Canada that applies to us directly where users, tenants, can track rent evictions and rent hikes in Toronto against their landlords. Now, I'm going to sit here and say, that's fine. Do it. Good for you. But let's stop getting mad when we do the same thing, especially when it's a private company you're buying into. Like, this is just open-ended. This isn't even a community. This is just log in, send us your reviews, send us your criticisms, and we will leave a big fat black dot on your landlord moving forward. So here's what the article says, torontostories.com. Thank you. If your landlord is trying to get you to move out so they can renovate, or they've recently applied for an above guideline rent increase, there's now a user-generated website that allows Toronto tenants to anonymously report their landlords. We're going to do it together. It's called Renovictions TO, which is a volunteer-run project, seeks to document the unfair practices and to give tenants the tools and information they need to organize and fight back against their landlord. Good for you. Good job, guys. No problem. I have no problem with that. I have no problem with people saying keepyourrent.com. I have no problem. Just don't get mad at me when we do the same thing. If you're a landlord out there, I would recommend just jumping on the website. Make sure your name or your properties aren't there. You can search by both. Make sure that you don't have any black dots. And I think this thing is just taking off, so maybe give it a bit of time. Check in periodically. If you even think this is going to have any impact whatsoever, we'll see. But there is a huge double standard out there, and it is interesting. I just find it fascinating. I love you, tenants. I love you, landlords. But as a landlord who helps find tenants, let's keep it fair, really. Anyways, I'm going to leave it there. I hope you guys learned some fun stuff. Leave us a comment. We are #1 on iTunes, Spotify, and Google Podcasts for Toronto real estate. In the meantime, may your cash flow be fat and your punchlines on point. Stay thirsty, my friends. I'll see you next time. Take care and keep it real.